And that's one of the reasons why gold is going up now, because geopolitical tensions are increasing.
But I think we're now early in the next leg up, which is going to take the price of gold to many multiples of its, current price, well north of $10,000. But what we're witnessing is the collapse of the dollar, and not just the dollar, the euro, the yen, the pound. I mean, all these central banks have got themselves into this box where they kept interest rates at zero or in some cases negative, and enabled massive deficit spending for governments around the world. And now we're going to, have to deal with the consequences of that massive inflation that has been unleashed. And you're going to see it most dramatically in the price of gold.
This week, gold prices have experienced a significant rebound, driven by geopolitical tensions and growing risk aversion among investors. The escalation of the Russia-Ukraine conflict has heightened concerns in global markets, especially after the U.S. approved the use of American-made missiles by Ukraine, stoking fears of a broader conflict. As a result, demand for safe haven assets like gold has surged, with gold experiencing its best weekly performance since March 2023. The price of gold rose by over 5%, closing at $2,600 per ounce, underscoring the role of gold as a hedge against mounting global uncertainties. Legendary analyst Gerald Celente, an American trend forecaster, and renowned economist Peter Schiff have long highlighted gold's role as a store of value and a safeguard against inflation. Schiff, in particular, has pointed out the risks posed by excessive money printing and rising global debt, devaluing fiat currencies, especially the US dollar. He has boldly predicted that gold's upward trajectory could continue significantly, with prices potentially reaching $26,000 or even $100,000 per ounce. Schiff emphasizes that, unlike fiat currencies, gold cannot be manipulated or printed at will, making it an essential asset for protecting wealth from inflation and the devaluation of paper currencies. Both Schiff and Celente agree that gold's status as a safe haven asset has become even more pronounced in recent years, particularly during economic and geopolitical instability, with central banks worldwide maintaining loose monetary policies and mounting inflationary pressures. The demand for gold is expected to remain robust. Schiff notes that the dollar's declining value further strengthens the appeal of gold, which retains intrinsic value in contrast to paper currencies vulnerable to manipulation. As such, analysts foresee significant potential for gold's price to rise further in the years ahead, making it a key asset for investors seeking to protect their wealth amid the ongoing erosion of fiat currencies. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
Gold goes back up. Let's see, it closed at $2,668. Again, 2 weeks before the election, we've been saying it on the air as well for weeks. We wrote in the Trends Journal that gold has to go down at least 200 points. It had a straight run up. And then the Trump coming in and Trump's promising that he would end the Ukraine war in 24 hours when elected. Let's see. That's what brought gold down, part of it, because of the geopolitical tensions he eased. That's a fact. And that's one of the reasons why gold is going up now, because geopolitical tensions are increasing.
But I think we're now early in the next leg up, which is going to take the price of gold to many multiples of its current price, well north of $10,000. What we're witnessing is the collapse of the dollar, and not just the dollar, the euro, the yen, the pound. I mean, all these central banks have got themselves into this box where they kept interest rates at zero or in some cases negative, and enabled massive deficit spending for governments around the world. And now we're going to, have to deal with the consequences of that massive inflation that has been unleashed. And you're going to see it most dramatically in the price of gold, because you're not actually looking at the price of gold. You're looking at the price of currencies collapsing against real money. When America didn't have a central bank and we were on a gold standard, the price of gold was constant. It was $20 an ounce in 1789, and it was still $20 an ounce in 1913 when we created the Fed. So the dollar was able to buy the same amount of gold in 1913 as it did in 1789. In 125 years, the dollar maintained its value. Then Roosevelt devalued in 1933, and now you needed $35 to buy an ounce of gold. And that was the same, although it was artificial because we started printing a bunch of money, especially in the 60s. But we went off the gold standard in 1971. But now we've gone from $35 to $2,700. Gold hasn't changed. Gold is exactly the same as it was in 1789, right, when we had the first Coinage Act, and we defined the dollar as a weight of gold. What's changed is the value of the dollar that the governments create. And gold is just showing you that dollar's collapsing. The dollar has already lost more than 99% of its purchasing power since the country was founded. So that means you need more than 100 times as many dollars to buy things that, other than, what we would have paid if we hadn't debased the dollar. And that's why the standard of living has gone down for a lot of people in this country. That's why Trump, is as popular as he is again, and why he won for the first time was because people are upset that they have to work 2 or 3 jobs and they still can't pay the bills, so they have record credit card debt because the value of the money is being destroyed. And that inflation tax is how the government is now funding.
Gold's recent surge to record highs has garnered little attention in mainstream financial news, despite its significant implications for the broader economic landscape. Peter suggests rising gold prices reflect concerns over the Federal Reserve's rate cuts, which could exacerbate inflationary pressures. While Bitcoin's short-term fluctuations dominate financial headlines, gold's steady upward trajectory signals deeper economic trends, such as the erosion of fiat currencies. At the same time, the demand for gold is being driven largely by central banks, which are shifting their reserves from US dollars to gold to hedge against potential currency devaluation. Central bank purchases have surged significantly, with 186 tons of gold bought in the last quarter, marking a notable year-over-year increase. Since the beginning of the year, central banks have accumulated 694 tons of gold, reflecting a trend that began after Russia's financial assets were blocked, sparking concerns in emerging markets. This trend is expected to continue, particularly among economies with low gold reserves, as they seek to diversify and strengthen their financial stability. The increasing pace of gold buying by central banks underscores the precious metal's growing importance as a store of value in times of global uncertainty.
First of all, I wanted to mention, you talked about how there's no coverage at all in the media of the gold rise. I mean, you might not expect it in conventional, news, but you might expect that the financial news would be covering it, and they're not. They completely ignore it. I mean, maybe because now, too, it's making a record high almost every day that it's like, there's nothing new about it. But when gold is doing this, this is very significant. I mean, this is sending a clear signal that the Fed is making a mistake, that the rate cuts are a mistake, that inflation is going to be a lot higher. And they're ignoring those warning signs. Part of it is because of the distraction about Bitcoin. I mean, I'll be watching on financial news and gold will be making a new high. And not only will they not talk about gold's significant new high, they'll go on and on about Bitcoin making a new, 1-month high. Even though Bitcoin peaked out in terms of gold almost 7 months ago. It was in March of this year. Bitcoin is down about 30% priced in gold. So to me, it seems like Bitcoin is in a real bear market because gold is not just, it's not just the dollar that's going down in terms of gold, it's Bitcoin too. And, the Dow is negative this year in terms of gold. It's hard to find. There's a few NASDAQ stocks and things like that have gone up, but a lot of that has to do with speculative mania, bubbles that are going on that have bid up these prices. But yeah, you have a complete absence of coverage and not a lot of people are buying. We have Schiff Gold as my gold company. Business is pretty slow. It hasn't picked up. If you look at the ETFs, there have been net liquidations this year out of gold ETFs. The public is selling. And so if the public is selling, who's buying? I mean, somebody's got to be buying. It's mostly foreign central banks because they're trying to replace their dollars. and they're trying to replace it with real money, and they got a long way to go because they still have a lot of dollars to unload. But imagine what's going to happen to the price of gold when the central banks have to compete with private investors. Not just individuals, but the big guys, pension funds, hedge funds, mutual funds. What happens when real money tries to get into the gold market? I put out on my X today, I have over 1 million followers. You should follow me on X if you don't do it. But I noticed that MicroStrategy now, which has been on a tear, it's at a new 52-week high. It's now got a larger market cap than every gold stock in the world, with the exception of Newmont. And it may pass Newmont, despite the fact that it has no earnings, it's losing money, and it makes nothing. There's a software business in there somewhere, but it's a small fraction. All it is a leverage play on Bitcoin. Yet, it's worth more than Barrick Gold, which is the number 2 gold company in the world. So that the public is distracted by what's going on in that casino, and they're missing out on the real significance of what this means, because the increase in gold's market cap, that dwarfs the entire market cap of Bitcoin. Gold going up is a lot more significant than some string of numbers that people are gambling on, which will ultimately collapse.
Gold's recent price movements have prompted analysts to revise their year-end target to between $2,800 and $2,900 per ounce. Initially, the forecasted target of $3,000 was expected to be achieved sooner. Still, the recent correction in the market means this key psychological level is now anticipated to be reached later, potentially in the first quarter, Q1, or even the second quarter, Q2, of 2025. This revised expectation reflects market conditions and the broader economic climate, where inflation and geopolitical risks influence investor sentiment. Once gold breaks through the $3,000 threshold, it is expected to hover around this price for several months, as this level is a significant psychological barrier, often seen as a major resistance point in the market. Is the recent pullback in gold prices an opportunity for long-term investors to enter the market? Please share your thoughts in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.